I watched over 30 YouTubers talking about Duolingo. I tracked every single bull and bear argument to collect the absolute best insights and make the ultimate Duolingo investing video. Today we will see massive creators like Joseph Carson, Jerry Lefebvre, In The Money, and many others to make you an expert on this stock in the most entertaining way possible. So I cut out all the irrelevant stuff and we are reacting only to the best and most useful part, not to this AI slot.
Multiple languages, bro!
Quick disclaimer, I did this research because I have a massive position on Duolingo that I will reveal at the end of this video. I've done my best to present both the bull and the bear points equally. Clearly not financial advice. Let's go. There are three main points of discussions that divide the bulls and the bears, but I also want to show you some extra clips that I believe are very meaningful or at least entertaining before we arrive to the conclusions and the final YouTuber's take. But let's start with the first big dispute. Does Duolingo have a moat that can protect them from competition or not? Check it out.
Are there any switching costs? Can users switch away from Duolingo app to another language learning app?
Duolingo is enormous in this category of learning languages in different subjects.
This is not a sticky product, it's a novelty. It's gamified dopamine, for real. Like when you use it, it's obvious it's gamified and meant to just give you dopamine hit for pretend learning.
If you want to argue that Duolingo has a moat, most likely you would need to go into the data direction, and all the A/B testing and the data that Duolingo has will turn into a moat or nothing else than, let's say, a bunch of data that is not the difference maker when it comes to actually building a competitive tool. And Duolingo is no Meta. You know, the ecosystem that Meta has produces a magnitude of valuable data more than Duolingo ever could. And if I had to bet, I would say Duolingo's data advantage wouldn't be enough to prevent it from, a competitor building a similar app with AI. And switching costs and network effects are rather low too, but if anything, probably the scale that Duolingo has already reached, plus the brand, is why I would say it's likely to succeed. The data mode alone, probably not.
The biggest competition for Duolingo is the attention economy. When users leave the platform, the reason they leave is primarily because of them stopping learning. It's not like they leave the platform and then go to another platform to start learning elsewhere. The reason they leave is because they stop learning it in its entirety. And so the real competition for Duolingo, there literally is no competition in the education market. There is broader competition when it comes to capturing people's attention.
At the end of the day, no matter how you spin it, this is a fragile, narrow moat business. And I don't think at some point in the future they're going to expand that moat into like something like we see with a Spotify or like anything like that. I think, there's some mild network effects. They have a very strong brand, so on and so forth. But I can't see this business being super wide moat.
These guys have no competition. So 85% of the entire market's DAOs, daily active users in the language learning industry, are on Duolingo. No one has more engaged customers than they do.
Apparently, people think that the way to get rich is to own a stock that has a better app to teach people a foreign language. I kid you not. I am not making this up. And I am not talking about a pill or injection that makes people learn a foreign language on the spot. No. Duolingo gives people different tools to learn a foreign language. I have thousands of tools that I can use to learn a new language. I can read books, I can take classes, I can use italki, I can watch free YouTube videos, I can use hundreds of apps, I can even use AI.
My opinion is that there are psychological switching costs and there is an advantage given by a super strong brand and all the data Duolingo collects. This clip from the last conference call is very interesting.
The reason Duolingo so far has not really gotten competition at a large scale, again, we have like 85% of the daily active users of language learning apps in the world, is because it's pretty hard to compete with our free product in the sense that we have really huge distribution. And a new entrant, when they come in, they need to figure out how to grow. What they usually do is they try performance marketing to try to grow fast. But because our free product is so good, they usually cannot make their performance marketing work if they are to have a free product. So what then they do is they put a paywall on it, and then that just really caps them. So it's just been really hard for entrants. I mean, look, the reality is that over the span of Duolingo, we have probably seen, I don't know, 400 apps come up and try to compete with us. And I'm making that number up. It's hundreds. And we just don't see them grow, again, because we have a very large distribution.
It is very hard to compete with a free product at scale, and hundreds have failed already. However, I'm not so naive to think Duolingo moat is incredible and it will be here forever. It's not. It's unlikely, but it could be disrupted. Connected to branding and distribution, let's hear a bullish, meaningful clip by Drew Cohen on marketing efficiency.
It is very hard to set yourself apart as a mobile app, especially in the language space. There's a lot of different language apps out there, but they've been able to do it pretty successfully. And now they also have a bit of a brand, so it's going to be a lower customer acquisition cost for them, because maybe you're not that interested in a language now, but you've heard of Duolingo, and 3 months, 6 months, 9 months from now, all of a sudden you're going to go on a trip, you decide you want to learn a little bit of a language before you go, and at that point Duolingo kind of catches your eye versus other language apps, which, you know, who even knows of any of those. So that is one reason why customer acquisition cost could be lower in the future. They're building themselves a brand, which is, you know, just another positive for them. And so on these growth metrics, you know, sales efficiency is one way we could kind of call this metric. Pretty strong, honestly.
After this bullish point, I need to restore the balance with the bears. Travis talking about dilution and moat.
So this is a company that has a lot of cash coming into the business, but also a lot of dilution from that stock-based compensation. The monthly active users has essentially been flat throughout 2025. This is, I think, if there's one red flag that you're going to look at from this earnings report, it's going to be that stock-based compensation. It's also going to be this monthly active user number. How many people are actually downloading the app, using it every once in a while, but not necessarily on a daily basis? That hasn't really gone much of anywhere.
Let's hope that with all this dilution, Duolingo is at least hiring the best talent in the world. Actually, I should get some shares to make this video, don't you think? Please comment Duo, give Adri some shares. Seriously, they're creating 2 million shares. Don't they deserve 10? At least I will hold them, not like the insiders selling. Next big debate point. Can Duolingo keep growing? At what speed? Are we close to market saturation? Let's start with Unrivaled Investing, because he underlined exactly how important this is.
This is the real question. This is the one I sort of struggle with, which is, what is the growth rate over the next 5 years? I think anyone that's a bull, I don't own shares in Duolingo, but anyone that's a bull is really making a call that you think they're going to be able to keep growing at 20% per year going forward at a minimum. All of this may be possible, but I don't feel like I have enough conviction on these data points to say, yeah, this is why it's a no-brainer.
I think Daniel is right. The real bulls are projecting 20% growth or over, while the bears have much lower projections. Check it out.
So when we look at this, there's a couple assumptions we can make. And this is how I view Duolingo. I really think that they're going to have an earnings per share growth rate, maybe next year of 16 to 18%. And then I think it will reaccelerate after that. I would say normalized, it's around 20% per year. So we're going to put in 20% here. At an earnings per share multiple trailing of 22, I think we get an attractive return from the stock, around 17% here. And so these assumptions give us a nice, healthy, market-beating return from today. But I would say that this is also one where things go very differently. There's a chance that Duolingo could grow earnings substantially faster if they resume their user growth over time. If they get a huge influx of users from increasing their platform, they could have much higher returns than this.
When we look at the way they're growing free cash flow now, and the way AI costs are going to continue to be cheaper, make this business more profitable, I think 25% is incredibly reasonable and almost conservative. You got to understand they went through a major hype cycle at the end of last year and kind of going into the very beginning of this year. Okay, now that brought in a ton, and I mean millions upon millions and millions of new users to this product. Okay, the hype cycle from what I have seen on social media and whatnot is now over for the company, well over. Okay. And so I think the revenue growth is going to be much slower rate in 26 than it was in 25. And I'm talking much slower.
We have to give credit to where it's due and admit that Jeremy was clearly right about his prediction for 2026, but I believe he was wrong about the next part.
Only so many people want to learn a new language. You know, if you think this is Facebook and they're going to be able to get to 3 billion users, it's not. I hate to break the news to you, it's not. You know, their new big product is, oh, we're going to teach you how to play chess. Okay, good luck.
Chess has 600 million people that are active players of this game. 600 million is not niche. That's quite a big market to grow into. Even if Duolingo captures a tiny fraction of that market, they'll be substantially bigger. And of course, chess players are growing in numbers as well. The sport overall is growing. Chess is one of those games where you don't really learn it for a short amount of time. People play it their entire lives. It's like a culture. It's considered a learning exercise. There's so many people across the world that play that one common game. Then Duolingo is also in math and music, which of course are not niche as well. These are basic fundamentals that everybody on planet Earth needs to learn. Every kid in school is learning these things. They're pivoting into categories that are the opposite of niche. They go into categories that billions of people are actively trying to learn.
I think that investors are really underappreciating and misunderstanding the true size of the education industry. But I do not believe that Duolingo has reached some sort of ceiling, and therefore the reason as to why they can't grow monthly active users to the rate of which they were doing in the past is because they've hit this ceiling. I don't believe that is the case, and management have reaffirmed that they believe they can grow materially higher over the coming years.
So let's hear what the CEO told us exactly.
In terms of market saturation, for example, we look at things like the percentage of daily active users in a given country compared to the size of the internet base of that country. So for example, in the United States, 2% of all internet users on a given day use Duolingo. So 2% penetration in the US for daily users. In the UK, that's 3%. In Germany, that's 4%. And Germany is not the highest country we have. We actually think we can get much higher than that. But even if we only assume that every country got to 2%, which is the US penetration, we would more than double our daily active users. So I just don't think we're near saturation at all.
The TAM, the total addressable market, is huge. So even if I can predict short-term growth, I believe long-term Duolingo has the potential to reach a lot more people. But one valid bearish point related to this growth discussion is the DAO streak issue.
We all know how effective streaks are for getting people active every single day on the app. However, when I think back to my Duolingo use, and it looks like yours has been the same, at least the last 3 months of using it, I was just keeping my streak alive by quickly finishing a lesson, and that made me count into the daily active user statistic. However, I wasn't using the app for longer than 2 or 3 minutes, and I wouldn't be surprised if that's the case for a whole lot of people, and those people are unlikely to convert to a paid subscription. And if they're already on a paid subscription, it's likely they will churn eventually.
I would also like for Duolingo to disclose data on engagement quality, not just quantity. I'm sure Forecaster would immediately add it to the special data tab, because Luca, the creator of Forecaster, is a big Duolingo bull and has a very unique bullish take.
If we go here on the overbought and oversold layer, and we ask Forecaster Terminal to tell us if we are in a bullish reversal divergency, here we are. Look, I just activated the long divergency, and since few months we are in a bullish divergency. And last but not least, as you can see from the chart, we also had a very strong spike in volumes. These volume spike are all the big investors that are doubling down the position on Duolingo. So I really think sooner or later, the pessimism that we have on Duolingo will turn to optimism, and this is a company that can really skyrocket again and reach new all-time high.
The divergence with spiking volume is technically very interesting, and with Forecaster is really easy to see these signals. Click the link below to try Forecaster, and please use the discount coupon code ADRI To support my research, it took me days to produce this video. The last big, extremely polarizing topic is of course artificial intelligence, AI and Duolingo. Tailwind or disruption? Two bears and two bulls.
They're literally bragging that they're shifting away from their monetization to long-term AI bet. They think they're going to ride this AI wave like with a skateboard duct tape to a Roomba. It just doesn't make sense. And when I read this, I almost injected bleach into my brokerage account. I even Googled to see if anybody still performs lobotomy. Even bleach in the eyes might be a good idea. You get the point. Duolingo is out of place here to think, oh, we have an AI wave, let me hop on board, right? Like, what are you doing? You're a language learning app. That doesn't even work very well. Like, I used you for like many hours in the past, and I remember Indem Taxi and like Milsh. That's about it. And now they think they're going to brute force their way into becoming a like world-class AI tutor across maybe multiple subjects. One that's as effective and engaging or more than a real human being. Do they have any idea what that entails? That's not just a hard problem. That's like the final boss of like education technology. It's like announcing you're going to outsing Adele using like a kazoo. It's absurd.
I guess many people over the past few years were surprised that I was saying that this was actually a giant AI winner in the making. Because if you have more and better proprietary data, you do become the dominant ontology, and therefore deliver more value per token than anyone else. The DAO to MAU ratio continues to go up in a straight line. This means that more monthly active users every quarter choose to become a daily active user. This signals that actually customers are finding more value in the app instead of less value. The idea that AI is disrupting this company is therefore rendered relatively futile just by this graph. And you can see how even with the onset of LLMs in late 2022, actually that trend accelerated a lot.
Can AI disrupt Duolingo? Do you know for sure that Duolingo is going to be around in 5 years because of AI?
Artificial intelligence came here. It was December 2022 when ChatGPT came in our lives. This doesn't look like a company which is disrupted by the artificial intelligence.
I agree with Luca. I do not see AI disrupting Duolingo right now, but will AI make it very easy to replicate Duolingo and develop similar apps? Maybe. But let's hear Luis.
Can a new competitor show up because AI allows the building of something faster? So it is true that with AI you can build stuff faster. And I assume that that'll be more true over time. That is an assumption that we have. The good news is that also applies to us. So we can also build stuff faster. So that is good. The other thing to say is, there's a little bit of a misunderstanding, I think, in the market about how easy it is to recreate a very sophisticated app like Duolingo. The reality is that if I were to write down just the spec of Duolingo, and I'm not talking about recreating it as in a programming language, like write it down in English, it would take me years because there are a million corner cases of things that we do that we're really smart about how, what we do for the user to get them to be more engaged or teach better, etc. So I'm not particularly worried about somebody just magically pressing a button and an app appearing that that is just better than Duolingo.
I really like Luis' answers. I think he's a very good CEO. But before I tell you my final take, I prepared the compilations with all the YouTubers' conclusions. Check it out.
I arrive at a fair value of roughly $133 a share.
I get a fair value of about $180 per share.
The intrinsic value is $329. That's the fair value I calculated.
No matter which is the method we use to evaluate this company, we find a really undervalued company.
So I believe Duolingo here is undervalued.
Who cares about a language learning app? No, think about it as an educational and gaming app, and I think you'll understand why it actually works.
They think they're building the future of education. They're actually building a $13 billion chat bot in a bird costume at best. That's not a bet I want to be long.
I would be shocked if the stock didn't double or significantly more than that over the next 3 years.
The hedge I did, and then why I did it, is a company named Duolingo. Little Dingo.
it's not something that I consider to be like a safe investment for parking, you know, a giant amount of my money.
So my average is around $240 per share now. And I plan to continue buying because honestly, I thought this earnings report was impressive.
Or maybe Duolingo can add a course on how to use the brain better. Just a suggestion.
But like I said, I remain mostly bullish long-term on Duolingo, and I will probably buy some more shares here after the giant crash.
Duolingo is my smallest position, and it's also my worst performing. This stock is a $17,000 position right now. We're down $22,600 in the red.
The long-term opportunity can still play out, which is why I did initiate a starter position today.
One of the stocks that I bought in March is Duolingo. Great value for investors today, has a phenomenal balance sheet, over $1 billion worth of cash. Actually just announced a $400 million share repurchase program.
So yes, I'm shorting Duolingo.
Duolingo, okay. The Duolingo put options, I would have made $300,000 more in profit. $300,000 more in profit if I just held through. I took a huge profit initial, thought I did so amazing, and oh gosh, was the big money ahead.
It is a phenomenal opportunity today.
It's a story I'm happy to watch from the sidelines.
In the case of Duolingo, my average price is now around $140 a share. It initially was about $240 a share, but I've been buying quite substantially over the past week or so, especially to lower that average price.
Why make generational wealth on a stock when you can lose generational wealth on a stock like Duolingo?
So if you had to say, like, Daniel, buy, sell, or hold, I'd probably be somewhere between buy and hold.
I hate this company.
Yes, no, maybe, who knows? It could be a great story. It's very unlikely it will be. You can make some money on the stock rebounding, some good news, things like that.
And I would absolutely be fine going into a coma for the next 10 years, owning this company. I would wake up and I think I would be far better off, you know, just having held it for 10 years. So it gets a 90 out of 100 for our kind of final buy checklist.
I opened a very small gambling position in my personal portfolio at an average price of $114. It's certainly money that I'm okay to lose.
You need better apps.
This drop is giving a phenomenal opportunity to buy this company at its lowest price to sales ratio ever, its lowest valuation in general ever.
I do think that the stock is actually cheap right now.
Am I buying Duolingo here? And the answer is no. And the reason is because I am not personally confident in this business's moat, and I do not necessarily know for certain if the business is going to be able to maintain high growth rates over the long term.
I hope you liked my compilation. Smash the like button. My fair value is currently $200, but I think Duolingo will go higher. It's my main conviction right now. It's over 20% of my portfolio, and I'm going to buy more. I like the stock. Roaring Kitty liked GameStop. Adriconomics like Duolingo. I know, it's not the same, but the short interest is also quite high. Squeeze, like, share, subscribe, comment, and maybe watch the next one. It's very cool. Happy Easter, everybody. Peace out.